some of these things
policies of government. I have with me Mr. Ayodeji, Managing Director, Afrinvest Securities. Thank you for your time. Welcome to
Thanks for having
business.
me.
All right, the World Bank just concluded its meeting in Washington, D.C., specifically reference to Nigeria. What do you think of the bank's forecast of 1.9% growth for 2018? Do you think it's realistic?
Yeah, you mean for the economy?
Yes.
Yeah, it's 1.9%. I think it's realistic in light of some of the leading indicators. We've seen the purchasing managers index have been on the uptrend month on month. We've also seen in terms of liquidity within the FX market, though there's still a lot that will be done within that space, but it's that projection. We feel if government with the proper implementation of the economic recovery growth plan, we feel that will be achieved. It's possible. But when you also looking at the medium-term economic expenditure framework that have just been released, you will discover the growth rate that being projected there seems unrealistic, 4.8%, which is far apart from what the IMF is also projecting.
Okay, look at the bank has disagreed with the Finance Minister, Kemi Adeosun, on our propensity to borrow. So what do you think about the current rising revenue ratio, debt to revenue ratio?
Yes, it's worrying, as well as we may know that in the short term you also need to borrow to at least fund some critical needs. Government needs to also see how they will reduce the burden of expenditure on the government. A lot of some of these critical projects government can partner with the private sector. But you would see government should be able to sit back and see why private sector have not been showing a lot of interest in some of these capital projects. The PPP law, I think, needs to also be rejected in terms of trying to provide confidence for private investors, how they can be protected no matter the government that is in place. So we've seen a lot of flip-flops in terms of reversing concession in the past, and some of those things have not gone down well with a lot of potential investors that would have seen in this critical sector. So in terms of borrowing, for us, we know we need to borrow, but where are we channeling some of these borrowings to? Can it be tied to some capital project? We saw the Sukuk that was just issued was tied to some specific road projects. If some of these borrowings can easily be tied and can be traced and is not used in financing expenditure in terms of recurrent expenditure, salaries and expenses, then I feel borrowing will be able to produce in terms of generating return that we're able to pay back in the future.
Okay, you spoke, let's take you back to your last question where you said about it's not realistic, the 2018 to 2020 medium-term framework. What do you think about that? Yes,
I think first highlighting what are the assumptions that government made in the 2018 to 2020 medium-term expenditure framework. One, they're expecting, when you look at in terms of the FX projection, 305 naira to $1, it's unrealistic in light of the current reality. We've seen most of the transactions being done, it's done within the NAFEX window or the investor and exporters window. We also want to look at in terms of production, 2.3 million barrel per day. You look at that in light of what OPEC is trying to also gauge in terms of our production. So currently, we know we're still sub 2.2 million. You also want to look at in terms of the revenue shortages. They are projecting an increase in expenditure to about 7.9 trillion. How do we finance this? Is still borrowing that would help to fill that gap? You also want to look at in terms of the split, capital project about 2.4 trillion naira, they're approaching the 30%. But what we've observed over time is because of the revenue shortages that it's being experienced, the capital project is always at the receiving end. So it's easier to project, but in terms of the implementation, how is government going to achieve this? How are they going to partner partner with private investors to help reduce the gap. So it's not about borrowing. Even if you are borrowing abroad, you also have to repay, even if the interest rate is cheaper to domestic borrowing.
Okay, let me ask you on the last question. Afrinvest has launched a report on the banking sector. Can you let us into some of the findings of this report?
Yes, interesting. Every year Afrinvest launches its banking sector report, and this year, interesting, we are partnering with the London Stock Exchange to be officially launched next week, and we'll be discussing a lot of the opportunity that is available to Nigerians. We've titled this year's banking sector report, Nigeria is open for business. So we feel that some of the current development we've seen within the FX market, we've seen the influx into the fixed income market, into the equities market. We feel some of these things we also need to showcase it to foreign investors. Some of what the government is also doing in terms of enhancing improvement in an enabling environment. Some of those things also needs to be reinforced. And some of what we've also discovered looking at the banking sector, you look at on a year-on-year basis, we've seen, despite the challenges within the banking space, the bank have been able to grow their top line significantly, as well as even their bottom line. All
right, let me ask you on what you just said about some of the challenges faced. One of the challenges faced is non-performing loans. Based on the report, what do you think is the way forward? How can that be handled?
Yes, you could tie the spike, about 91% spike in in impairment charges, to the performance in terms of the economy. You've seen, when you look at the results that have been published this year, you've seen in moderation. Some of the loans that have been issued have not been performing. For some of them are now performing, and in terms of provisions that should be made, or you want to call it impairment charges, is also reducing. So for most banks, what they are doing now is recovery. For some of these loans have been restructured in terms of their repayment has been reduced to accommodate the current cash flow of the company. So we feel that in 2017, in terms of impairment charges, will not be as significant as we saw in 2016.
All right, thank you very much, Mr. Ebo, for your time.
Thanks for having me.